Good afternoon, everybody, and welcome to the OASFA Financial Aid 201 webinar. We are happy that you have joined us this afternoon. Uh, just a couple housekeeping announcements. So Faith, if you want to go to that next slide. Uh, we are going to encourage you all to type questions today in your question box. So please do that. You are welcome to type in questions today about anything you see in the presentation. But as we also announced in the description and promotion for this webinar, if you have any type of financial aid questions, there are a group of financial aid administrators on this call who will tackle sort of any question that you have. So you're welcome to type that in the question box as well, or hold that for the end. We will let you, for example, raise your hand and ask a question or something as we come to the end of the presentation. The presentation today is being brought to you by OASFA, the State Financial Aid Association. As you know, we do lots of outreach and training for school counselors. You are welcome to utilize any of the information that you find today. If you choose to download this presentation eventually off the OASFA counselor resource page or anything, just please make sure that you reference OASFA as the source of the information. Next slide, please. Just to cover quickly what we're going to have on the agenda today, we're going to talk about FAFSA completion numbers in Ohio. We are going to talk about the federal verification process. We're going to talk about financial aid award letters and working with students as they're reviewing those. We're going to cover special circumstances. As we know, the folks who are filing the FAFSA now are putting 2019 income information on the form, and that we know 2020 caused a lot of disruptions to families. We're going to talk about different sources for paying for college, and then continued resources available for school counselors and access folks. Next slide, please. So let's briefly talk about FAFSA completion numbers. The numbers and percentages that you're seeing on the screen right now are as of February 12th, and Monday the information will be updated and will probably jump up through February 26th. But the trend that we want to show you, it's probably not shocking to anyone that the state of Ohio is behind in FAFSA completion. Nationally, we are behind in FAFSA completion for the class of 2021. So if you take a look at the left-hand chart, you're going to see that Ohio is faring a little bit better than the national numbers. We are down just under 9% compared to the class of 2020 at that time last year, where nationally they're behind just over 9% compared to this time last year. To the right, you can see the percentage of our senior class that have completed a FAFSA through February 12th. So Ohio, I guess the good news is we're behind, but we're ahead of the national average. Ohio has just about 45% of the senior class who had completed a FAFSA, while nationally it's still down around 39%. So Ohio is ahead of the national average there, but still behind where we need to be. Next slide, please. So as you've heard me say, nationally we're down a little over 9% compared to last year, and we're down just under 9% compared to this year. The good news is that if we take a look at all the states, Ohio ranks 12th in terms of the highest completion rate in the country with the 44.6% of the class. Ohio is probably consistently every year. It finishes with the percentage completed usually somewhere in the top 15, but we want you to know that we're sitting at 12th, but we're in a sense almost 9 percentage points behind. The good news is that since December, the states have and the students have been sort of clawing their way back. We have gained over kind of 10 percentage points, or where we've reduced the amount we were behind by about 10 percentage points since December. Sort of the low point was at the end of November, sort of around the country, most of the country at that point in time was 17% behind where they were the previous year. So while we're down only about 9% overall in Ohio, we do need to point out that our Title I schools, so our low-income high schools, are down at about 10%. And unfortunately, our students with a high minority population, our schools, they're currently down over 17% at this point. So we've got some work that we need to do in terms of making up some ground for where we're at with FAFSA completion. Next slide, please. We will let you know if you're interested in looking at aggregate numbers or seeing how Ohio's doing. The National College Attainment Network, where I come from, and I think I forgot to say I'm Morley Keller at the beginning from the NCAN organization, has a website where you can look, and it's updated weekly at consistent aggregate numbers of FAFSAs completed not only by Ohio, but you have the ability on our site to drill down and look at aggregate numbers for the state, the district, the city, the individual high schools. So we welcome you if you want to use that resource. We also know that many of you may access the student level data. In other words, which students literally in your building have completed the FAFSA. This link, the ohio-k12.help/FAFSA website, is where you obtain that information. You can get on that website to make sure and see if your school district has signed up to receive student level data. If not, the instructions are there. It does need a data sharing agreement signed by the superintendent in your districts. They continue to enhance this website. Much was done prior to tracking this year's FAFSA data, and their plan is to continue working on enhancements and even have the system better and better by the time this fall rolls around. So it is important, and people are watching FAFSA completion in Ohio. Next slide, please. This is, for example, when you jump on the Form Your Future tracker, these are the type of charts that you see nationally where we're at. So this is the type of information that's updated every week. Just wanted you to be able to see, what the top of the web page looks like. Next slide, please. And here's showing the current rankings. So you can see that Ohio is 12th. The leaderboard, the top 5, Tennessee, DC, Illinois, New Jersey, and Massachusetts. The leaderboard on the right is also one where you'd want to be near the top, because near the top means that you have a pretty close percentage of FAFSAs completed compared to last year. But as you can see, you can't even see Ohio in the top 13. We are down around 20th because our drop rate compared to last year is close to 9%. The only place that is ahead of where they were this time last year is Puerto Rico by 1%. And Puerto Rico generally has a fairly low FAFSA completion rate, so it doesn't mean that they have thousands and thousands of FAFSAs completed. It just means they're 1% ahead of where they were this time last year. Next slide, please. There was recently announced about a week and a half ago from the chancellor in Ohio. We have a chancellor at the Ohio Department of Higher Education and a governor's office that are very interested in FAFSA completion, and they know Ohio is behind. So they are going to be using some of the federal GEAR money available as a result of COVID to put out some efforts in the next several months to try and continue to bump up that FAFSA completion rate for the class of 2021. They are going to be making grants to access and community organizations who want to work on getting FAFSA completion done between now and when fall term starts. Some of the money is going to go, as I mentioned earlier, to enhance that FAFSA data tracking system. They're going to do an awareness campaign. They're going to provide some professional development training so that community-based folks, school counselors, folks like that can get additional training on the FAFSA so that they're ready to help. We don't have a lot of details yet, but it's my understanding that maybe sometime today we'll see the information about how the organizations can apply for funds to ramp up FAFSA completion work. The other thing that was very interesting is when the governor introduced his budget for the next biennium, there is language in his budget that for future graduating classes, and I think it starts in, 3 years, if I remember the language correctly, that completing a FAFSA may become a high school graduation requirement, obviously with exemptions available, knowing that 100% of students would not be completing a FAFSA. So it will be interesting to watch that, and if that survives in the budget bill, we will know what happens when the budget is passed, and that should be prior to July 1 this year. So lots of emphasis, lots of spotlights on trying to get the FAFSA completed, because we know it is a huge indicator about whether a student is likely to enroll in college next year. Next slide, please. At this point, I'm going to turn it over to my co-presenter, Faith Phillips, who will handle the next section of our presentation today.
Thank you, Morley. There is no one better than Morley to talk about FAFSA numbers and make it as engaging and as exciting as she does, but very important information. And you're all out there listening, knowing, you know, the challenges we're facing in getting the FAFSA completion done right now throughout the pandemic. As Morley said, my name is Faith Phillips. I'm the Director of Student Financial Services at Central Ohio Technical College and Ohio State New York. And I'm going to be talking to you today about the federal verification process and special circumstances. So verification is a process where students are selected to basically just verify that they filed the FAFSA properly. So students submit their FAFSA to the federal processor. The results are sent back to the student. They're sent to the school. With the results sent back to the student, they are notified if they have been selected by the federal processor for this process called verification. Approximately 22% of FAFSAs are selected for verification by the Department of Education. We cannot encourage students enough and parents to respond to the request for information that comes from the college. So even though the student will see on their student aid report that they've been flagged for the verification process, they need to wait for the financial aid office to notify them what documents they need to submit to us and how they need to submit that information to us. The student also needs to be aware that even if the federal processor doesn't select them, so they've not been notified on their student aid report that they were selected, the school may institutionally select a student. So when the FAFSAs are received by the financial aid office, we have to review them as well. And if we find something is conflicting with the data specifically in our system, we may select the student for some form of the verification process and notify the student of the documents that we need. If selected, the most commonly requested documents are a verification worksheet and a federal tax return or a federal tax transcript. And basically, we are just trying to verify that the student and the parent took the information properly off of their tax return and put the information properly into the FAFSA form. So this year, the student will see a request for a verification worksheet. If they are applying to multiple schools and they're selected at all of the schools and are requested to submit a verification worksheet, these verification worksheets are not dictated by the federal government. We are told what we have to ask, but we can make them look however we want. So they will see 3 different verification worksheets potentially from 3 different schools, but they should be asking for the same information. And then a signed copy of either the federal tax return, and if they don't have access to the tax return for 2019, they can request a federal tax return transcript from the IRS. So a couple years ago, we were only allowed to accept transcripts. We've now reverted back to being able to accept transcripts as well as the federal tax return. And again, keeping in mind that we're looking at the 2019 tax information, not the 2020 tax information that they just completed. Occasionally, we may also ask for the W-2s for the parent or the student if they worked in 2019. If they didn't file taxes and they worked, then most cases we will ask for a copy of the W-2s. If the parent or an independent student applies for financial aid and indicates that they did not file a 2019 tax return and they are selected for verification, the financial aid office is required to request them to provide us with a verification of non-filing letter. This is not requested of dependent students who indicated they did not file. And this can be a frustrating process for families because they said they didn't file, they know they didn't file, but we're required to have them get something from the IRS that confirms that they were not required to file a tax return. Again, we may accept a income tax return. Again, if you remember, several years ago, it was always the tax return. Then for many years, it was only an IRS tax transcript. We can now accept a federal tax return, but it must be signed by both parties who are listed on the tax return. So if the parents are married and both filed the tax return, then they need to both have it signed. This is the website that families can request the IRS tax transcript. When the schools notify the student that they've been selected for verification, we are explaining to them how they gain access to the tax transcript. We will give them the website and the IRS telephone number. They may also do an online account request or request it by mail. They can no longer have a tax transcript, however, sent to a third party. So some families would go onto the IRS website and request the tax transcript be sent directly to the school. That can no longer happen. It is important to note about verification, and you as counselors may hear this as students come into you and say, you know, we were selected for this process. It really feels like they're accusing us of doing something wrong. And we want to assure families it has nothing to do with an accusation of doing something wrong or that we're picking on families. It is just a random way to make sure that families are putting the information properly on the FAFSA form and ensuring that the federal funds are getting to the right students. So please assure your families that the college is not picking on them, that there is a random selection process as well as other criteria that we have to use in order to select a family if we need additional information. The other thing that we like to stress to families is financial aid administrators are not required or expected to be tax experts. However, it sure feels like we are. When we are looking at a tax return and a W-2, we have to understand some basics of tax law in order to understand if it was filed properly. And so we may look at a tax return and say, we're not quite sure that the student or the parent filed it correctly. And we have gone out to families and said, this is a common example where the parent indicated that they were eligible to file head of household. But based on information that we have, we do not believe that they were allowed to file as head of household. And we have gone back out to parents and students and said, you need to refile your tax return before we can move forward in the verification process and the financial aid awarding process. And so it's a fine balance for us to not have to be tax experts, but yet have to know enough that makes sure that the family filed the taxes properly. We do have the authority to request that they file their tax return or amend it if we feel that it was not filed correctly. We will cite the IRS policies. There is a document that every financial aid office saves in their system every year, and we will refer to it, we'll copy it, we'll send it back to the family and say, here's the information we have on how we feel you should have filed. And if that isn't how you are requested to file, you have to get proof to us from the IRS that you did indeed file properly. All right, so we're going to now move into special circumstances. I'm going to cover the whole gamut of special circumstances, but we will focus mainly on the income appeal process as well. But special circumstances is an authority that is given to a financial aid administrator through the Higher Education Act to use our discretion to adjust on a case-by-case basis in limited circumstances when we feel that an applicant, a parent, or a spouse has an unusual circumstance that is not addressed specifically on the FAFSA form. While we have been given this authority, schools are not required to exercise this professional judgment. Now, I've been doing financial aid for many years. I've been in the state of Ohio for 24 years. And I haven't met a financial aid administrator that does not in some form or fashion look at special circumstances. But we do like to let families know that we aren't required to do that by federal law. The professional judgment authority allows us to look at the student's dependency status. So if the FAFSA determines that they're dependent, but they have a special circumstance that they would like us to consider them as independent, we have the authority to do that. We have the authority to look at specific data elements on the FAFSA form and determine if those data elements could be changed in order to impact the student's eligibility for financial aid. We have the authority to award an unsubsidized loan only in the case where a student has a parent that refuses to file the FAFSA form. We have the authority to modify the cost of attendance for students. So there are several components built into the cost of attendance. We cannot create new cost of attendance, but if we feel that the cost of attendance we assigned to a student doesn't accurately depict their cost with the proper documentation, we could increase or adjust that cost of attendance. Many people don't think of it, but satisfactory academic progress that we are required by law to monitor, if we choose to allow the student to appeal the cancellation of financial aid based on their academic progress, that is professional judgment authority that we are using under this authority. And then also we have the right to refuse to certify a student's loan or reduce the loan amount that they are eligible. Now, we could talk all day on all of these topics, but I'm going to focus more on the top three because we feel that those are the circumstances that will be brought to you at the high school level if you have students asking you questions. So a financial aid administrator cannot make an independent student dependent. So if a student says yes to any of the dependency status questions and by definition is independent and parents' information is not required, but I know that that student's parents are fully supporting them, I cannot just use my own judgment and make them independent. If they can say yes to a dependency status question, they're independent regardless. As I mentioned earlier, we can't create new costs of attendance. I can't adjust the bottom line EFC. So the student comes in and says, boy, you know, my mom and dad lost their job. Well, you know what, I'm just going to give you a 0 EFC because I feel for you. I can't do that. I can only impact the items that impact the EFC. We cannot make across the board adjustments to a population of students. I can't pick out all of my nursing students and apply something directly to them. I have to be able to do all of my adjustments based on a case-by-case basis. I cannot say, you know what, by definition, you're not eligible, but I think you're going to be a great student, so I'm going to make you eligible for financial aid. I can't override that. I have to have specific circumstances in which we adjust their eligibility. And of course, we can never circumvent the intent of the law or the regulations. So dependency status. On the FAFSA form, there are a series of dependency status questions that if the student says no to those, they are automatically considered dependent and parents' information is required on the form. They cannot indicate to us on the form that they are independent for a specific reason. But what the student can do is say that, yes, I know I'm dependent, but I'm going to progress with the FAFSA form. I'm not going to add my parents' information, and at least the FAFSA can be sent to the financial aid offices where they want it sent to, and then we can discuss their circumstances with them. So a financial aid administrator in documentable determination can make an otherwise dependent student independent based on abuse, estrangement, or abandonment from the parents. So if the student gives us a written explanation, provides supporting documentation, we really, really prefer third-party documentation. So something that comes from their high school counselors, a teacher, a clergy, government agency, court documents, anything that is more of a third-party documentation, we will accept those. And we may accept signed statements from relatives and friends, but again, we like to have that corroboration of a third-party document. And on a case-by-case basis, with the appropriate documentation, could determine that we are going to override the student's status and make them independent for that financial aid year. Circumstances that are not considered unusual under the dependency override authority is write out parents' refusal to contribute, parents' unwillingness to file the FAFSA or provide information for the FAFSA or complete verification forms. Student doesn't, or parent does not claim the student on their taxes. We get that a lot. Well, my parents don't claim me anymore, so I should be independent. Simply not claiming them does not automatically make them independent. And student demonstrating total self-sufficiency. So we have seen this a few times at COTC where the student is 23 years old, by definition is dependent for financial aid, has a great relationship with their parents, but they've been working since they were 18, making a decent amount of money, and some of them have even owned their own homes. But if by definition on the FAFSA form they are dependent, we cannot override their status just because they are self-supporting. So applicants who answer no to all dependency determination questions, as I said, may submit the FAFSA without parents' information. The FAFSA will be sent to all of the schools that they have selected on their FAFSA form, and EFC will not be calculated. It is not considered at that time an official submitted FAFSA form. It is not considered one that will have an EFC calculated. And then the student will want to work directly with the financial aid offices to submit a dependency status appeal. So again, going back to verification, if the student is applying at 3 different colleges right now, and they indicate that they have a special circumstance, they will need to process that special circumstance, and in this case, a dependency appeal at all 3 of those institutions. And they may do a dependency appeal at COTC, and a dependency appeal at OSU, and a dependency appeal at University of Dayton. And all 3 of us may have a different response to the student. And so the student needs to be prepared for that, that it is the decision is based on the financial aid administrator at that school. And as we mentioned with verification forms a few minutes ago, it's the same thing with appeal forms. They may look completely different. And so I just kind of put up there COTC's dependency appeal form versus OSU's dependency appeal form. You can see the language is slightly different. The intent at the end of the day is the same. It's just a different type of form and a different type of process. If the parent refuses to file the FAFSA form, we cannot outright make the student independent for financial aid, but we can, with the proper statements from the student and the parent, make them eligible for an unsubsidized Stafford only, and it's based on their current grade level at that time. So an incoming freshman, the maximum they can receive is $5,500. If I approve a parent refusal, I can only certify the student's loan for $5,500. And at many schools, that will not cover tuition and fees. So the student needs to know up front, even if a parent refusal is approved and I give you an unsubsidized loan, you need to understand there isn't any other financial aid from federal financial aid coming after it. Even if by filing the FAFSA, you would have 0 EFC, if your parents will not file it for you, I cannot consider you for a grant. So for this provision, students have to document with a signed statement from their parents that the parent refuses to file the FAFSA, that the parent does not and will not provide any financial support to the student and the date that support ended, and that the parent refuses to provide these documents. If the parent refuses to provide these documents, the student may submit statements from third party to support the student's circumstances. So a lot of cases we get the parent refusal to file, we also get the parent refusing to complete these documents for us. So we do our best to work with these students. At least they have a small option. Before the parent refusal authority came to us, we had no recourse for the student. But again, each school takes this process slightly different. Each school has a different looking form to the parent refusal process. But if you're working with a student who you don't think meets the definition of a dependency override, but their parent is outright refusing, have that student reach out to the financial aid office and discuss the parent refusal process. So examples of other special circumstances, these are more financially driven. The parent or spouse death since the FAFSA was filed, loss of income or employment, which is the biggest one that we expect to see going into this next year, divorce after the FAFSA has been filed, loss of child support. When the student files the FAFSA form for 21-22, they are using 2019 taxable and untaxable income. So if the parent received child support in 2019, even though that has stopped or is about to stop, they still have to report it on the FAFSA that they're submitting. So that would be an appealable item because that the child support tends to stop when a student turns 18 or ceases to be enrolled in high school. So eligibility for financial aid, again, for 21-22 is based on the 2019 tax year, which we recognize more than any year previously that this may not be indicative of a family's current ability to pay for their college education. And so to remedy this, we are allowed to evaluate special circumstances always on a case-by-case basis with adequate documentation what would better reflect a family's financial picture. And due to the pandemic, schools are preparing for an increase in the number of appeals based on losses of income in 2020. So this has been, we've known this was coming. The federal government has reached out to colleges and said, please be as most supportive as you can with families more than ever this year because of the pandemic. So again, before presenting these special circumstances to the college, the student and the parent must file the FAFSA as it directs with their 2019 taxable and untaxable income. Many colleges will then have an appeal form. Most may have it out on their website. Some don't quite have it out there just yet. We're still getting ready to kick off the 21-22 year. So tell the student to be patient if they don't see it on the school's financial aid website, or they've contacted the school and they tell them, you know what, check back with us in late March or early April, to be prepared that the forms may not be available. So you can see up here, that first one, you can't tell, but that's OSU's website. The appeal forms for 21-22. The dependency appeal form is out there. The expected family contribution form, even though it doesn't say coming soon, it's not out there quite yet. We're not quite ready to put that out there. But the bottom one is for COTC under appeal forms. Our income appeal is out there. Also help the family understand that we call them different things from college to college. So some may call it an EFC or an expected family contribution appeal. Some call it an income appeal. Some call it a special circumstances appeal. So just, let them know that they're just contacting the colleges and say, I need to appeal based on a change in income. And the college will lead them to what the form is called and what appeal form they will need in order to let us know what their special circumstance is and for us to take them through that process. Again, with the appeal form, they will be expected to provide a written explanation of the change in circumstance, and they will be required to provide documentation to support it. So the most common documentation we receive for loss of employment is usually a layoff or a termination letter. Oftentimes we can use documentation that they're receiving unemployment benefits, so that gives us information we need. Then we usually will ask them for a copy, especially now that 2020 taxes are being filed, a copy of, say, their 2020 taxes, so that we can compare what they reported on the FAFSA for 19 compared to what they earned for 2020. A lot of the times we'll request W-2s, pay stubs, any other source that we can obtain from them that shows us received and anticipated income. And then we will ask them, give us an estimate of your future or current income. We need to look at last picture or last tax year's picture, as well as the future and current income. The college will then review and determine if the change would impact the student's aid eligibility. And if appropriate, we will go in and make changes to the FAFSA form on behalf of the student. So if the income, adjusted gross income, for example, for 2019 is much greater than the adjusted gross income for 2020, we will go in and the financial aid administrator will change that income and recalculate the FAFSA, which will recalculate the EFC. And we have to flag it so that it doesn't appear that we just went and changed 2019 income. The college's financial aid office will flag that FAFSA to say that we did a special circumstance and we're using an estimated type of income. There is a free resource out there to assist families that we found in writing their special circumstance appeal. This formswift.com is a great resource that you can give to your families to go out and assist them in writing their explanation for any type of an appeal. Can't say this enough, remind your students if they are applying to more than one college, this process will have to be repeated at every college that they are considering. Also, appeal decisions are at the discretion of the university's financial aid office. So if you do an income appeal at 3 different colleges, you may get 3 different responses on how they handle the appeal. And the decision cannot be appealed to the U.S. Department of Education. The authority or the decision that the financial aid office made is the final decision. If the student has been selected for that verification process, they must complete the process before an appeal will be reviewed. So we will need to go and make sure that they did file the FAFSA correctly with their 2019 income before we go in and make any adjustments to it as a result of an approved income appeal. All right, I'm now going to turn it over to Ed to talk about financial aid award offers.
All right, thanks so much, Faith. Good afternoon, everybody. My name is Ed Recker. I'm with Sallie Mae. Previous to joining Sallie Mae, I was on campus for about 15 years at 3 different institutions, BGSU, so Bowling Green, Terra Community College, as well as the University of Findlay, mostly in financial aid positions. So thanks so much for joining us. And as Faith said, we're going to jump off here into financial aid award offers. Next slide, please. So one of the biggest challenges with financial aid offers or awards, and I think that in and of itself kind of encapsulates what we're up against here, is just different terminology, different forms, different form layouts. I mean, Faith had mentioned it earlier about the special circumstances, applications, and things of that nature. One of the biggest challenges is that there is no standard format for these letters and awards. Schools, although there's guidance from both the U.S. Department of Education as well as, our governing body, NASFA, that says, hey, these are some preferred layouts. This is how you should, really approach these types of awards and offers in terms of naming methodology and things of that nature. There is no standard format, which makes it really challenging and confusing, potentially confusing for folks. So the slide in front of us here has 2 different award offers, 2 different types of institutions, and really kind of encapsulates that issue. So let's kind of break it down, at least as best we can in this short amount of time. So the letter on the left represents one from a 4-year public institution. The one on the right is modeled after a 4-year private institution. Both of them have their pros and cons. So looking at these as they stand, the first public is not nearly as busy, but it does do a pretty good job of spelling out estimated cost of attendance through an itemized list. So it does a really good job of kind of breaking that down, itemized it out. The second is busy, but it also does a good job of spelling out aid offers in a segmented manner. So it breaks them down into those boxes, makes it easier to discern the different types of aid and how much they are. It doesn't, however, do a good job of spelling out cost of attendance. So next slide, please. So again, we take a look at estimated cost of attendance and remaining costs. Again, different layouts, different ways of looking at it. The first school, again, it really breaks it down line by line. Tuition fees, program fees, room and board books, and so forth. It does a great job of really spelling that out and giving you an estimate. And then it does a good job of subtracting the aid and saying, okay, this is your estimated remaining cost. However, you do have to kind of keep an eye on what's all in that bucket, what they've subtracted out, because we're not going to go too deep into this today, but oftentimes schools can put in optional aid, such as federal work study, that students have to earn through a paycheck. They'll subtract it off of there. And that can be a little bit misleading because oftentimes federal work study jobs aren't guaranteed and they have to earn that through a paycheck. So it's not something that's automatically deducted from that remaining balance. Whereas that second school, they do a little bit better job of kind of breaking it down. But even with that being said, they do have that pesky asterisk there that says, hey, basically, this isn't everything. There are still some costs out there that you're probably going to incur. They do put a placeholder out there, $2,000 to $3,000, but it's not factored in. And again, a really good example as to why in the world these things are so confusing. Next slide, please. To help with that, OASPA does have some tools available, and this is a great example of the tool. It's our college cost comparison worksheet, and it really does a good job of allowing students and families to be able to take those award offers, set them, I always say, set them down on the kitchen table, lay them side by side, and go through and kind of lay things out line by line. So it breaks it down based on direct educational expenses. So things basically that are going to be billed directly to the student, tuition, fees, if you're living on campus, housing, meal plan. And then it starts to talk about financial aid offered, specifically in this case, scholarships and grants, so free money. Let's itemize those, get that factored in. What types of student loans or campus work? Again, I'd mentioned work study, what's available there. And that's really going to get you down to that estimated balance due. What's really due at that point? It then talks about indirect or variable expenses. So we talked a little bit about that earlier. Things that can fluctuate, things that you're not necessarily going to get a direct bill for, but you're still going to have to pay for, with books and supplies being number one. And if you're living off campus housing, personal expenses, etc. And then it really does boil down, okay, this is that estimated total due. This is what it's going to cost. So again, a really good, really helpful worksheet. It's out on our OASPA website, and you can see the URL there on the right of the screen. Next slide, please. So we've talked a little bit about the differences in award offers and how to read them. So how really does America pay for college? And this is pulled from a recent study as to, well, how does America pay? And you'll notice that the bulk of the funding really comes from parent income and savings, parent borrowing. So parents are shouldering overall the brunt of it, over 50%. But students are still involved. Savings, borrowing, and grants and scholarships are also a really big hunk, 25%. So it really does show there, although there are many elements, there are pieces coming from pretty much everywhere to help pay for college on average, based on your average household. Next slide, please. And so, when we talk about that and say, all right, knowing that this is an average and we're not sure where all the money's coming from, how do we pay for this gap? If any one of those falls short, how do we pay for the gap? And there are several options available to students and families to help pay that gap. And before we dig into any one singular one, I just want to be really clear that there really isn't one better than another, from the perspective of it's really on a student by student, family by family basis. So we're going to present all options and hopefully give you good information so that you can help families make a decision that best fits them. So first one, right off the bat, tuition payment plans. And it's really exactly what it sounds like. Most schools offer tuition payment plans. So it allows the family to pay tuition in manageable monthly payments using household income. So just basically breaks that remaining balance up into monthly payments and allows you to pay over time. It can provide an interest-free funding option, although oftentimes schools will charge some type of kind of application fee or some type of nominal fee for this payment plan. It helps reduce the need to borrow money to pay the bill, so that's a good thing, keeping student loans low. Like I had mentioned, some plans have fees or other charges, oftentimes like an application fee or something of that nature. And it really is treated like a payment and a payment plan in the way that if you are late on it, oftentimes the school is going to charge a late fee. So there may be penalties if you don't pay on time. So that's tuition payment plans. Next slide, please. So the next option, and this is, I know that I said that there aren't any that are better than the other, but I would say this is probably the best option if you're looking for additional funds for college, which is the federal loan programs, specifically direct subsidized and unsubsidized loan programs for students. So both are federal loan programs, both are low interest loans for students, and students do have to be enrolled in college at least half-time. Now, half-time's a little bit fluid from school to school, institution to institution, but generally speaking, half-time is 6 credit hours if the school's on a credit hour basis. So subsidized loans and unsubsidized loans. Direct subsidized loans, these are available to, again, eligible undergrad students, but they have to show demonstrated financial need. And we didn't really go into what that means, but that's something determined at the school level. It could change from school to school based on some elements, but generally speaking, the school will let you know if you're eligible for a subsidized loan. Interest is paid by the federal government while the student is in school at least half-time during their 6-month grace period. So again, this is the most advantageous, the best loan you can get for a student, because essentially interest-free while they're in school. The federal government pays the interest, so what you borrow is what you're going to pay back. Once it goes into repayment. Interest isn't accruing while in repayment. Direct unsubsidized loan, little bit different. A lot of similarities to that direct subsidized loan. They're available to undergrad and grad students. So subsidized loans are only for undergraduate students. Unsubsidized loans, undergrad and grad students can get it. Students are not required to show financial need for an unsubsidized loan. So this is open to pretty much anyone who completes a FAFSA and has a valid FAFSA on file. And payments are not required while the student is in school and during their 6-month grace period. But this is the biggest difference from the unsubsidized loan, or I'm sorry, the subsidized loan. The unsubsidized loan does accrue interest during this time period. So keep that in mind. Both really good options, subsidized better than the unsubsidized. So a little bit more about these two. They do have borrowing limits, and those borrowing limits are based on your year in college. So for undergraduate students, it can't exceed $5,500 for the first year, $6,500 for the second year, and then $7,500 for the third and final years. And independent students may have higher limits. So keep that in mind. There usually is a bump for independent students. Military members may be eligible for special interest benefits regarding their federal loans. And again, payment begins 6 months after leaving school, graduating, or dropping to less than half-time. There are flexible payment options. Oftentimes that term will default to a 10-year term. So if the student doesn't, or if the borrower doesn't reach out to the Department of Education, they're going to set it to a 10-year repayment period. There are some different repayment schedules that can go up to 25 years. There are various deferment options available to students if there are cases of unemployment, underemployment, or just economic hardship. So keep that in mind. It's a really good benefit for federal student loans. And there are also loan forgiveness options through things like public service loan forgiveness, things of that nature. And we do have a nice chart on the right there that shows what the current interest rates are. Interest rates are fantastic right now, 2.75% for both subsidized and unsubsidized loans. One thing about all federal loans, whether it be subsidized, unsubsidized, or Parent Plus, which we'll talk about in just a bit, is that they do charge what's called an origination fee. And an origination fee is essentially like an upfront fee for the loan that the Department of Ed deducts from that disbursement. So using easy math, if someone takes out a $1,000 subsidized loan, the student is actually only going to see $990 on their student account, dispersed to their student account. And the reason being is that 1% origination fee. So keep that in mind. That's arguably the only downside if you need to take out one of these types of federal loans. So next slide, please. So those first two, when we talk about payment plan, we talk about subsidized and unsubsidized loans. Those are kind of the big ones. Those are the ones that are ideal. If there's still a remaining gap, these are the types of payment mechanisms that are in place to help families and students pay for any remaining gap. And again, these are all different. They all have pros and cons, and we're going to touch a little bit on each one of those pros and cons. But the important thing to know is that there are options out there, and it's really about finding that best fit for the student and their family. Next slide, please. So first, we're talking about long-term investments. So these are things that parents can pull funds out of investments like mutual funds, stocks or bonds to pay for college without borrowing. And like any of these, they have pros and cons. So the pro is, no credit check or lengthy application for these. They can just access the funds, sell some stocks, pull it out of a mutual fund, things of that nature. And again, access, easy to access. The cons, you know what? They may be intended for future retirement. That's always a downside. You can borrow for college. You can't take out a loan for retirement. So think about that. Future loss of future growth. So compound interest, I always say, is an amazing thing. You're getting interest on your interest when it comes to investments. But if you pull money out of those investments, you're not going to be able to take advantage of compound interest. So keep that in mind. And you may have to sell it at a loss. So if you bought a stock at, say, $10 a share, it's only at $8 a share. You sell it, you have no chance of recouping that loss, and you're going backwards on that investment. So again, a potential con. Next slide, please. So home equity lines of credit. So again, another option, and the biggest pro for this is easy access. So if you have equity in your house, it's really easily accessible. Generally, talk to your bank, fill out the application. You can get that money out either in lump sum or draw off of it over time. Some of the cons, though, you need to pay that back in order to sell your home. So if you sell your home, you got to pay that back. It's kind of less money you're getting out of your home. It may be needed in the future. A lot of folks will utilize home equity lines basically to reinvest in that home, whether it be repairs or home improvements, things of that nature. So that's something to keep in mind as well. And then there may also be closing costs. So if there are fees, points, things like that associated with it, more than likely you'll have to pay for that. And then you also may or may not be able to get a death and disability forgiveness benefit if you take out a home equity line. So that's something you'd have to check with your lender or credit union if you went this route. Next slide, please. Credit cards. So again, credit cards, really easily accessible. They're super fast. Most people have credit cards. You pull the card out, you use it. Something really easy. If you're in a pinch, you can use that. And then another pro, some credit cards, oftentimes at this point, a lot, if not all, have some sort of rewards on purchases. So depending on what that rewards program is, that can be super convenient. Some of the cons, though, most schools, either they won't accept a credit card payment or they're going to charge you back that processing fee. So that's always a concern. Some folks might not realize that retailers and vendors are charged a fee to use credit cards, anywhere from, I believe it's 3 to upwards of 7 to 8%. So schools will oftentimes charge that back if students or families use a credit card. So you're essentially paying an extra 3 to 8% to use that credit card for tuition payments. Card limits. So depending on how much is owed, you're only going to be able to go up so high on that card because it has a limit on the spending, and it can be the most expensive way to help pay for college. Interest may compound monthly, and even though there may be special introductory rate offers, it may only be for a limited time. So you may want to, if you do have a really low introductory rate, be careful as it may jump up quickly. Next slide, please. We also have private student loans. A lot going on with these next couple of slides when we talk about private student loans and we talk about Parent Plus loans, federal Parent Plus loans, largely because these are probably the two most used when it comes to covering that gap. And again, a lot of options with both of them. So some of the pros of a private student loan is that the student is the primary borrower for the loan. So the loan is primarily in the student's name. A cosigner isn't usually necessary, but a cosigner can help not only secure the loan because it's based on credit, so credit worthiness, but it can also, a good cosigner can help secure better terms for the student. Most lenders offer no origination or disbursement fees. So again, a really good thing for folks that if you borrow that $1,000, $1,000 is dispersed to that account. And it can help a student build credit because again, it's going to be in the student's name. It's going to help them build credit. Some of the cons of private student loans, if they choose to defer payments. So that is usually an option with private student loans where the student does not have to start paying on it until post-graduation and post-grace period. Deferred payments may result in not only accrued interest, so similar to an unsubsidized loan, actually just like an unsubsidized loan, but something called interest capitalization. So with interest capitalization, this is a situation where interest is accruing while the student's in school if they're not paying that interest while they're in school. Once the student graduates or drops below half-time, they receive notices saying, okay, this interest is due. The student does not have to pay that interest, but can have it capitalized, which basically means that interest is being rolled back into the loan and they recalculate the loan payment based on it. The bad part about that is you are then being charged interest on your interest. So using that $1,000 example, if there was $50 worth of capitalized interest, you're no longer getting charged interest on the $1,000 loan, you're getting charged interest on a $1,050 loan. So keep that in mind. That's something to keep in mind with private student loans. The interest rate may be higher than a Parent Plus loan. So I had mentioned that private student loans are based on credit worthiness. There is a range of interest rates based on the credit worthiness of the borrower and potentially the co-borrower. Whereas a Parent Plus loan, it is one interest rate for all. So the interest rate may be higher than a Parent Plus loan. And the terms and costs vary from lender to lender. So there's definitely an element of little extra legwork. Like you're going to want to shop around when looking at private student loans because one lender may have a better offer than another, and none of them may be as good as a Parent Plus loan. So keep that in mind when looking at private student loans. Good viable option, but might not be the best option for a student or their family. Next slide, please. All right. Again, some things to think about when weighing repayment options on a private student loan. So if a student does choose to go this route, there are different options available. So they can choose to make some type of payment while in school. And what this helps with is it does help build credit if the borrower is making scheduled monthly payments on time. It does reduce that capitalized interest that we talked about, and it can lower the total loan cost. So if you're paying interest over time, it's going to reduce the total amount that you're repaying back to that loan. Deferred payments, if you choose to go that route, and that is oftentimes an option for private student loans, it does allow for more flexibility while in school. So if you defer payments, you don't have to make payments while you're in school. You could still do so, but it's not a requirement. However, in doing so, it does increase the total loan cost due to that capitalized interest, and some lenders may offer a higher interest rate for deferred repayment. So again, something to take a look at. And most of the times, those lenders will address that during that application process. Oftentimes, they'll give you varied rates. If one rate for repayment, whether it be interest only or full repayment, and then one for full deferment. So keep that in mind as students and families are kind of walking down this path and looking at different options. Next slide, please. So we're now going to talk a little bit about a Parent Plus loan. And Parent Plus loan is a federal loan. So it's through the U.S. Department of Education, and it's offered specifically to the parent. So it is a loan in the parent's name on behalf of the student. So some of the pros to this, it does have a fixed interest rate. So I know I'd mentioned with the private loans, Those can vary based on credit worthiness and vary between the lenders. With a Parent Plus loan, it is a fixed interest rate where if you're eligible, you receive that low fixed interest rate. And again, that interest rate does tend to be pretty low, which I believe for the upcoming year, or I'm sorry, this current year, it is 5.3% fixed interest rate, which again, really good interest rate for a Parent Plus loan, really for almost any loan. Some of the cons of a Parent Plus loan are that the parent is solely responsible for repayment. So I know I'd mentioned with private loans, student is the primary borrower. Oftentimes, the parent is a co-borrower. With the Parent Plus loan, the parent is solely responsible for repayment. And although there are some organizations out there, some companies out there that do student loan refinancing, beyond that, there's no mechanism to essentially transfer the loan over to the student in terms of responsibility. It will always be the parent's responsibility for the Parent Plus loan. Deferred payments may result in interest capitalization. So this really isn't any different from private student loans. They're kind of in the same vein where if you defer payment, interest accrues, that interest can be capitalized. And it does have origination fees. So this is something that I know we talked about a little bit with the subsidized and unsubsidized loan. This is also true with the Parent Plus loan. We're going to touch on that a little bit in the next slide. So next slide, please. So again, a little bit more about Parent Plus loans. They are available to parents of an undergraduate student, and they can be used to cover any remaining cost up to cost of attendance. So some of the requirements: the student must be enrolled at least half-time. So we talked about that a little earlier, usually 6 credit hours or more. It is generally paid back over a 10-year period. So the repayment period is a little bit more rigid, but generally speaking, 10 years. The maximum loan amount is the cost of attendance, which is determined by the school, minus any other financial aid received. So just basically any gap remaining. Federal Parent Plus loans are currently not eligible for income-based repayment. So they set it based on pretty much a standard repayment schedule. And you'll want to check studentaid.gov for interest rate and origination fees. So as it stands currently for this current year, the interest rate is 5.3%, which is, again, a really, really strong interest rate. And the origination fee, and it looks like we've got a older origination fee, but they tend not to change too much, is 4.236%. I think it went up like 0.02 of a point this past year, or maybe it was down. But the point being, it doesn't fluctuate too much. But again, 4%, a little over 4% origination fee, that's not insignificant and something you want to factor in when you look at your various options. So next slide, please. So, we've talked about a lot of different options here, and these are some key things to consider when you're shopping around for educational loans. So first and foremost, how much should I borrow? So always consider your financial situation and try to keep in mind what your expected starting salary and debt load is. And oftentimes folks use kind of a 1-to-1 ratio where folks would recommend try not to borrow more than what your first year annual salary would be. That way it keeps that debt load reasonable and it isn't cumbersome or burdensome to repay. What type of interest rate is it? Is it a fixed rate? Fixed rates tend to be more stable, but they're oftentimes more expensive. Variable rates can be less expensive, especially in the short term, but there's risk associated with them going up. And really, when we start talking about type of interest rate, this is more along the lines of a private loan. Federal loans, all of those interest rates are fixed. If someone chooses to go the route of a private loan, this is something they're definitely going to want to take a look at and keep in mind. Are there benefit programs offered? So are there any types of rewards or certain activities such as paying via ACH, so automated payment, or paying on time? Even with federal loans like Parent Plus loans, they do offer an interest rate reduction if you sign up for automatic payments. Private loans do the same. So keep that in mind and see how much of an interest rate reduction you can get off of that. And then there are other features to kind of keep an eye on. So what is that repayment term? Is there any flexibility in that repayment term? Are there fees, and what are they? If it's a private loan, can that cosigner be released from the loan? And are there death and disability waivers for the loans? And I'm happy to say that pretty much across the board, whether it be federal loans or private loans, that's pretty much standard now, but still something you're going to want to keep an eye on and keep in mind as you're determining what's that best fit for you. So next slide, please. All right, we've talked a lot about loans, we've talked a lot about award offers. Let's talk about resources. So the first one we have is FAFSA Help Ohio. So your landing page where you're going to start off is at OASPA, OASPA.org, but FAFSA Help Ohio, so you can see the icon all the way on the right side of that screenshot. And it does a good job of listing FAFSA events. So if you have a FAFSA event at your high school, at your organization, we ask that you add that FAFSA event that you're hosting so that others can see it and use it as a resource. But then there are also other resources for students and parents on this page. So we've got instructional videos, we've got handouts, and all of this you can link this to your school site. So we would strongly encourage that, because this page changes, I won't say often, but as we get additional good resources, we put them on there. And the best way to really review those is if you have that link hot on your website. That way you can look at it from time to time and see what else is out there. So, next slide, please. So that was OASPA. We also have some resources from Federal Student Aid. So you can view and download the resources from the Federal Student Aid website, which is listed there. This includes things like publications, fact sheets, online tools, and other resources that are available to help students prepare and pay for college. You do need to watch the years, because as of right now, the 2020-21 and 2021-22 documents are out there. So keep that in mind as you're looking at them. Also keep in mind, unfortunately, printed publications are no longer available from the U.S. Department of Education, but the PDFs are out there. So if you do need something printed, their kind of workaround for that is download the PDF and you can print it out. So I'm not sure when they changed that, but it's been quite some time ago. So next slide, please. And then we also have high school financial aid nights. So if you need a presenter for a financial aid night, this is the fast, easy way to request a financial aid night presenter. And we've got that at the bottom of the slide, where you simply click on that and fill out a quick form, and you can request a financial aid night presenter. OASPA, the outreach committee, can facilitate that. They will get in contact with somebody either in your area, or now during this COVID virtual environment, really it can be anyone from around the state of Ohio. They will help facilitate that speaker. And if that doesn't work, or we can't get anything around for you, there is a pre-recorded session available as well, and you can download that. And I believe that is our very own Faith Phillips that does that one on the recording. So next slide, please. We really encourage folks to put their name and email address in our College Access and School Counselor Contact database, and that's at OASPA.org. So some of the benefits we'll get information out to you about workshop registration, counselor event announcements and details, and training announcements. And another big reason why we ask this is, gang, there is no comprehensive database for you all as high school counselors. It does not exist in the state of Ohio. So one of our biggest challenges when we have really good tools and resources to get out to you is we don't necessarily know who you are unless you tell us. So please, please, please put your information in that database so that when we have these resources available, we can contact you about them. So next slide, please. And also out on that webpage, we do have, I'm sorry, just the resources page, we do have a FAFSA priority deadline list out there for high school counselors. So this is something that I believe we had out for articulation. We try to have this out really by the time the OACAC articulation happens in usually September, but it's still out there. But it gives you great information in terms of who the schools are, what if they have a deadline, what that deadline is, and so forth. And we also have other great counselor resources on that page. I'm not going to go through that list. You can definitely see what they are, but we try to keep it up to date. We try to add new resources. So we encourage you to utilize that page, utilize those resources as you continue to work with students. And at that, with the next slide, I believe we are at the end of the formal presentation. Are there any questions? I know we have the questions going, we have the chat going. So if folks have questions, please feel free to submit them now as well.
Yeah. Thanks, Ed, and thanks, Faith, for providing all kinds of great information. We do have some questions in the question box that we'll go to, but we will remind you that we encourage you to type your questions in there, particularly if you have any information or questions, I'm sorry, about the information you saw today. But this is also your opportunity to say, I have this student who, or here's the situation and what is the best thing way I can advise the student. So let's take a quick look at the question box. So if a student has a parents who are married but they file separately, the SAR mentions that they have answered a question wrong. Are these students likely selected for verification? So Faith, I'm not sure if you want to jump on that one to start with.
Yes, they could be selected for verification, and in that case, the parents would both need to send their tax returns and their tax transcripts, and then we will separate the income.
Great.
So, yeah.
How long does it typically take for a family to get their documents from the IRS, and could this adversely impact their award?
So unfortunately, well, normally it's 5 to 10 days. We have seen it take longer. We've heard from families that it's taking longer throughout the pandemic. So let me just say, it kind of depends on the college. And I'm going to say that by using Ohio State as an example. So if you have been selected for for verification at Ohio State, we put your documents that we're requesting out on your to-do list, and we put a due date. And we use that due date because it's very similar to our priority processing date of February 1, where we wanted your FAFSA done. We have those small pots of federal money and institutional dollars. And so we use that February 1 date. If you had your FAFSA to us, we'll consider you for those funds. If you're selected for verification, you have to meet that verification date. That said, those dates cannot hold you to any federal aid that you are eligible to receive. So if you've been selected for verification and it's taking you a while to get your information to the college, that cannot adjust your eligibility for your Pell Grant or your student loans. It could impact your eligibility for, say, the SEOG, the timing of it, just because, again, those funds are so limited. So I don't want to across the board say yes, and I don't want to across the board say no. Our favorite answer in financial aid is it depends. So just paying attention more than anything to these requests, because they're going to come to you, they're going to come to the student's school email asking for this information. The request for verification documents could be posted on the school's portal, or a letter could be coming home. You could be getting these requests from 3 different schools in 3 different manners. So it is so important that you're paying attention to, you know, have you logged into the school's portal as you've been asked to? Are you monitoring what we call your to-do list or your missing documents on the school's portal to make sure that you're responding to all requests for information? Some schools will go ahead and offer the student financial aid for freshmen prior to verification being completed. And we do that at Ohio State. While we're trying to get verification processed, we will go ahead and package a freshman with pending financial aid, with the understanding that it doesn't become a final offer till you complete that verification process. So again, I can't stress enough paying attention to the information that's coming from the school and making sure that the parents and students are responding to that information as quickly as possible. And let's see, I know Morley had to leave, so I'm just going to skim through here. So let's see, we have, I have a student whose mom hasn't filed taxes since 2016, but should be filing, is refusing to file the FAFSA because she hasn't done her taxes, which makes complete sense. Does she have any options in the appeal based on what would generally happen? Not sure if I should push her through the process. So, and you're correct. We tell families you can go ahead and file the FAFSA without having taxes done. And if you're not selected for verification, you might get through the process, but it's a risky process. That student could not be considered for a dependency override unless they can document abuse, abandonment, or estrangement from parents. So the student is really kind of tied to what the decisions that this parent made. So if that student is living with that parent and has a relationship with that parent, unfortunately, there aren't a lot of options. But for the counselor that asked that question, please reach out to any of us on this webinar. And if you have a little bit more of a background without getting more personal, perhaps we can guide that student a little bit more. But I will be very blunt that if a parent didn't file taxes, and they are the custodial parent who needs to be filing the FAFSA form and they're refusing, the only recourse that student could have would be a parent refusal. But what I'm reading into your scenario that you posted is that student's parent is still supporting them, so they wouldn't qualify for the parent refusal form. So I feel for that student, and we'll get a handful of these students where unfortunately we tell them you aren't independent until you turn 24. And I hate to tell a student, wait to go to college till you turn 24, but if you have to do it with financial assistance, your hands may be tied a little bit. I apologize for that negative response. Okay, I don't see any other questions in the chat. I'll give it a few minutes for you to post some questions. Lawrence Matthews, I know you have some questions out there. I know this is all new to you in the financial aid realm of things. For those of you that don't know, Lawrence has been in financial aid for a few years. I feel the need to fill silence, so bear with me while I fill it randomly. Well,
that's high praise right there, Faith.
Yep, I see it. Yep.
Lawrence just said, you're doing too good of a job for me to have any questions. And folks, again, who don't know Lawrence, that's about as high a praise as you can get. So well done, Faith.
And we know this is a lot of overwhelming information, but I can speak very comfortably for Ed and Morley and of course myself. You can find us on our school's websites. Please, in these challenging times, as you have questions for your specific students, reach out to any of us and we'll do the best. And I'm always honest, like I can answer very generic questions for other colleges, but I'm going to refer you to that college's financial aid office when it gets into more of the details of the circumstances. But the last thing we want is for your students to not get the questions to their answers. Nope, get the answers to their questions and make wrong decisions or miss dates, important dates. So we can't stress that enough. Give it Ed another minute or so, and then one of the biggest issues we are seeing this year is students are not listing step parents info on the FAFSA form. That's an important point. If the parents are divorced, but the parent that is filing the FAFSA form is remarried, the step parent is considered the other parent for the purposes of the FAFSA form. And I've spoken to enough parents, I'm sure Ed can say the same thing, who completely disagree with that. And we're here to tell you there's not, there are some things in the federal regulations we don't always agree with, but that is a steadfast regulation. because the FAFSA is looking at the financial strength of the household, not the biological parent. Even if when you got remarried, you all agreed, you know, you take care of your children financially and I'll take care of my children financially. When it comes to the FAFSA form, that step parent's information is required to be on the form. So thank you for pointing that out.
Yeah, I'd agree, Faith, and that is the one time that I've had someone, while I was in a financial aid office, actually throw something at me from across the desk. It's one of those that it's not necessarily something we like to point out. It is the rule. It is the regulation. It is required.
One of the questions I received this week from one of my fellow high school counselors, a student had emailed her and had said that the FAFSA did not confirm her statement that she was a citizen of the United States. And so if you know the FAFSA even just a little bit, it will ask the student, are you a US citizen or are you an eligible non-citizen? And when the FAFSA is processed, it goes up against several different database matches. And one of them is the Social Security Administration database to make sure that the student's name, social security number, and date of birth match. But also it goes up against the Department of Homeland Security if they said they were an eligible non-citizen to verify that status. And sometimes when they are a US citizen, sometimes that doesn't match. And so the question for the student was, what do I do now? And my response to the counselor was, the school's financial aid office will reach out to that student as a part of the verification process. So verification isn't just making sure that your tax information is correct and that your household size is correct, even though those are the two most common documents that we request. But if it doesn't come back that the student's status as a citizen or an eligible non-citizen doesn't match, then the school will select them for verifying that, and we'll ask them to provide the documents that support their claim to be a citizen or an eligible non-citizen. So that front page of the FAFSA form or of the student aid report that the student receives contains a lot of information for the student to read. And if there are any flags or questions that the college is going to come back with, it will be warning them right there in the language of the student aid report with what we call the financial aid comments. So referring the student back to that and just letting them know that, you know, the school will be reaching out and asking them for verification of the thing that is a question on their FAFSA form. All right, I do not see any more questions in the box, so I am going to wrap up our session. We appreciate all of you taking your Friday afternoon and attending. I hope that many of you are almost done with your day and can get out and enjoy some of this sunshine. The presentation itself, a recording of it, as well as the PowerPoint presentation within the next week or so will be uploaded to the OASFA website for you to go and if you want to go back to any section and listen to it again, or you want to encourage any of your colleagues that were unable to attend today, they can go in and view it as well, and you can get the PowerPoint presentation. So again, thank you all and have a wonderful Friday afternoon and a wonderful weekend.